Hey everybody, Smart Silver Stacker here. Very interesting day in markets today. We got the inflation data for October, and markets sure did like what they heard. We had a lower than expected inflation print. So month over month, the CPI increased by 0.4%, and then the year over year rate of inflation was down to 7.7%, and that was against an expected number of 7.9. So if inflation is slowing down and inflation is moving up but at a pace slower than what was expected, why are markets so jubilant? Well, it all has to do with expectations for what the Fed is going to be doing at their next meeting. How fast are they going to hike rates? Are they going to slow it down? Are they going to pivot? And markets seem to think that this lower than expected inflation print indicates that the Fed is going to pivot. We had the Fed whisperer, Nick Timiraos, over at the Wall Street Journal. He tweeted that after this data came out, that the Fed is now more likely to slow the pace of hikes down to 50 basis points in December. And we can take a look at the CME Fed Watch tool, which gives us data based on Fed funds futures pricing. And according to their tool, there is now an 85.4% chance of a 50 basis point hike in December and only a 14.6% chance of a 75 basis point hike. And the markets today are extremely euphoric on this CPI print. We had gold and silver both catching a bid, both adding to considerable gains that they've had over the past several trading sessions. And stocks across the board were up. Crude oil was up. The NASDAQ, very notably, was up almost 7% on this news. So a tremendous amount of euphoria in markets due to this anticipation of a Fed pivot. So are we going to get a Fed pivot? I mean, who knows? The next Fed meeting is on December 14th, and there's a lot that can happen between now and then. But at least for now, markets really seem to be anticipating a Fed pivot coming in the very near future. And, one thing that we can learn from this market move on this inflation data is just how decoupled from reality these markets really are. And this is not new to anybody who's been watching this channel, and I'm certainly not the only person who has been saying this. But fundamentals really don't mean anything in today's markets anymore. The only thing that matters is the anticipation of what the Fed is going to do next. And think about it. The pace of inflation is coming down now, according to this data from the CPI, and yet gold and silver are catching a bid. Now, that doesn't make a lot of sense if you think about it, because gold and silver, they're supposed to be inflation hedge assets. So you would think inflation coming down, that would mean a lower price for gold and silver. But of course, that's not the case here. What we're seeing is exactly the opposite. And again, this is because investors aren't basing their decisions on any fundamentals. They're just basing it on whether or not the easy money is going to return from the Fed. If the Fed is going to turn the spigots of liquidity back on. And I'm sure that the Fed, perhaps they will look at this inflation data and they'll see the opportunity to begin their pivot. But it's also possible that that might not happen. We've seen this before when Nick Timiraos, the Fed whisperer, when he posted that article a couple of weeks ago about the possibility of a Fed pivot and that he saw that coming, markets were very euphoric then. And yet Jerome Powell came out then and kind of jawboned the market lower. It was very hawkish. And we saw all of those gains evaporate. So, is the market going to hang on to the gains from this rally? Are they all going to evaporate? It's really anybody's guess. It's all just kind of gambling at this point. It's all determined by what the Fed does in December and what the markets anticipate the Fed is going to do moving forward. And the reason for this, the real fundamental reason behind all of this is that this economic recovery that we've experienced over the past decade or so, the inflation of this tremendous asset bubble in real estate and in stocks and just across the board, it was all predicated on easy money from the Fed. The Fed buying up almost $9 trillion worth of assets onto its balance sheet, the Fed keeping interest rates at historically low levels for year after year after year. That is what inflated this bubble, and the only thing that is going to save it is the Fed turning back on the spigots of liquidity. So, there's a lot that could go on between now and December 14th that could affect the Fed's decision. Notably, we've got the EU with their embargo against Russian oil. That could roil energy markets. That could have a significant impact on inflation. I mean, if energy prices skyrocket, then inflation is going to be right back up to where it was before. It's hard to say what exactly the Fed is thinking here. Now, it might be that the Fed sees this inflation data and we don't get any kind of catastrophic event between now and December 14th. They may just go for the 50 basis point hike. And if they do that, then I expect that we will be seeing more market euphoria in stocks, bonds, also in the precious metals. If the Fed does pivot in December, if that's a confirmation that the Fed is going to be slowing down the pace of their rate hikes, then yeah, we're going to see a lot of gains in gold and silver. So it's nice to have some. But on the other hand, look at the data. It was a 0.4% month over month increase in the CPI for October. If you annualize that, that comes out to 4.8%. So still a very elevated rate of inflation, and it's nowhere near the Fed's target of 2%. So, maybe the Fed will see this and think this isn't enough. We still need to be more aggressive in our hikes. Ultimately, my forecast is still that inflation is going to run out of control. These hikes aren't going to be sufficient. 1 month or a couple months of declining inflation data is not a sign that the problem is past. It's not like these numbers are low by any kind of historical standard. It just means that we did better than was expected. And I think markets are reading a little bit too much into this. But again, that just comes right back to that point that markets are not based in reality. They're not based on any fundamentals. They're just based on whether or not the easy money is going to come. And it's crazy that we've gotten to the point where we have such a managed economy that the only thing driving markets is the decision of this cabal of central bankers who meets once a month. But that is what we have gotten to. And if you don't think we have a managed economy, just think about what's going on here. The Fed, they're managing the key interest rate, the federal funds rate, which determines the price of credit across the board. And, interest rates are like the price of money, basically. And money is half of all transactions that occur in the economy. So if you're controlling the price of something as important as money, then you truly are managing everything in the economy. And, this is the predictable result of central planning and a controlled economy, is that you get all of these distortions, this malinvestment, this dependency on the Federal Reserve to keep things going along. And it's hard to say where this is going to go. I mean, another thing that this reveals to us, aside from the fact that markets are detached from reality, is just how volatile they are. I mean, look at this, one data point that comes out and the NASDAQ shoots up almost 7%. It's crazy. I mean, it's really crazy financial times that we're living through. All I can say is that, gold and silver, even though they're up today, even though they've been up a lot over the past couple weeks, physical metal is a way to take your wealth out of this crazy controlled financial system. And so I still think it's a good time to be getting your hands on some physical metal, especially if you don't have any. If you're just holding on to paper assets in this environment, assets whose price is entirely predicated, like I said, by a cabal of bankers, then it might be a good time to consider getting some physical precious metals in your hands. I know it makes me feel a lot more secure having some wealth outside of this financial system when I see days like today. And, to the extent that I'm holding paper assets, gold and silver miners doing very well over the past week. Nice to see some paper gains, of course, as well. But you can't count on any of that because it's all dependent on what comes out of Jerome Powell's mouth. That's it. So if he came out tomorrow and he said that he was going to hike 100 basis points in December, I mean, everything would fall apart. It's crazy how dependent things have become on this one factor. But that's where we're at, folks. And if you do want to get some gold and silver, today's video is brought to you by SD Bullion. They are my preferred bullion dealer, my preferred supplier of precious metals. But, I don't really care where you get your gold and silver from. Definitely SD Bullion is a great place to start. They've got a great selection, great prices, but I just think that it's important to get your wealth, at least a part of it, into some assets without counterparty risk when you're going through this kind of an environment. So let me know what you think in the comments below, folks. Do you think that the Fed's going to pivot in December? Do you think they're going to return to easy money? I mean, I think ultimately it's guaranteed that they will, but the timing of it is a much trickier thing. But markets certainly seem to think that is what is coming down the pipe. And if they do pivot, if we do see that 50 basis point rate hike, a slowdown in the pace of rate hikes, what do you think is going to happen to precious metals? What do you think is going to happen to the markets as a whole? Let me know in the comments down below. Always love to hear what you have to say. Thank you very much, everybody, for watching. I will catch you next time. Smart Silver Stacker, out.